the big multifamily game, a big piece of it is securities rules and raising capital. And I have raised over $375 million across my entire portfolio over a decade plus, right?
Mm-hmm.
A lot of people are teaching it incorrectly, and that's just so scary. It's just a scary landscape, because the good thing about social media is everyone has a platform. The bad thing about social media is everyone has a platform, and it's the double-edged sword.
Welcome back to this week's episode of the Lady Landlords podcast. I am your host, Becky Nova, and today we have joining us Veena Jetti from Vive Funds. Veena, thanks so much. How you doing today?
I'm so excited to be here. Thank you for having me.
Of course. I love to find experts in their spaces and invite them on here to really just be able to share what they're working on and to give a little insight. I always like to make a little how-to type tips for our Lady Landlords community. So I know I was introduced to you through Jamie Gruber, who is fantastic. I was actually on his show a little while ago. He was on mine. So when he was like, I know exactly the right person for you to talk to for Lady Landlords, I was like, perfect.
I
So
love that.
yeah, I think this is so
Jamie.
great. So when you find somebody great, they always are able to introduce you to somebody else that fits in that
100%.
category.
100%.
So, Veena, the first question that I always ask people is just to introduce yourself to our audience about you, the woman, not necessarily real estate related, but who you really are as a human.
Oh my gosh, I love this. Okay, so, well, and I feel like the real estate is part of my identity now,
Of
so
course.
it's hard to not put that in there. But I am a mom of twin 4.5-year-old daughters. I am a wife to an anesthesiologist. We've been married, it'll be 12 years this year that we'll have been married. I'm also a daughter and a daughter-in-law and a sister and a friend. And you know how most women are, we wear a million different titles. I'm
Mhm.
also the CEO, CFO, janitor, maid, all the things at home. And I also am an entrepreneur, so I own my own real estate private equity company. We invest in large Class B multifamily assets across the Sun Belt. And we've now transacted on over $1 billion of multifamily assets in my portfolio.
That's amazing.
Yeah.
And I love that you said, like, listen, like, one, we wear a lot of hats, but two, real estate has become so much of your identity over time because it really does. It becomes absolutely who we are. Did you always want to get into real estate, or how did you end up there?
No, well, okay, so I come from a real estate family. My mom's actually a real estate investor, very successful real estate investor, but she always bought single family homes because, I mean, in her defense and in my defense, neither of us knew you could buy multifamily. I thought that was for like Jeff Bezos, not for Jetty, right? And so I went and I got my degree in finance when I was 20 years old. I graduated from undergrad. And my mom was like, "Great, now you can come like work for the family business and we can go and do really great things together." I think she had like a dream in her mind, probably similar to what I have for my daughters, which I'm sure will never happen, right? But it's like, "Mom, I'm an adult with a degree. I'm going to do something completely different." And she was like, "All right, baby bird, go fly," right? And
Right.
I went and I worked in corporate real estate and made a lot of money for other people. I worked at some of the biggest firms in the world. And then ultimately, the first year my husband and I paid taxes as a married couple, we were both W-2 earners.
Hmm.
We paid like almost $200,000 in taxes. And I was like, what is happening? So I called my mom and I'm like, "Mom, can you believe this happened? Like, what do I do?" And she was like, "Well, Veena, quit your job because the IRS does not incentivize employees. They incentivize employers and business owners and real estate investors." So she was like, "Quit your job and get a full-time real estate professional designation." And I was
Hmm.
like, "Okay, this seems legit." And so I quit my job. I started buying single family and quickly realized I couldn't get to scale one house at
Hmm.
a time or one condo at a time. And then that's when I discovered the power of multifamily. And once I fell down that rabbit hole, I just basically never looked back.
Let's take a moment here to define multifamily
Yes.
because a lot of times when we talk multifamily more in Lady Landlords, we're usually talking about like, okay, well, more than one, but less than five,
Okay.
right?
Yeah. So I love that you're saying this because I feel like this is the biggest misconception around commercial real estate or multifamily. People say like a duplex, triplex, quad, those are not multifamily. So the very technical definition is 5 or more units under one dwelling. And when I say we buy large multifamily, I mean we don't even look at anything less than 200 units,
Mhm.
but like I really strongly prefer 3 to 400 units and up. So our last deal that we bought was 432 units in the Phoenix market.
Gotcha. Thank you. Because I think that's a very, very important distinction because a lot of times you hear people saying, great, I want to scale. So instead of buying one property, I'm going to buy two
Right,
properties, right? I'm going to buy a duplex.
right.
And then that all of a sudden, that technically under the word of multifamily is a multifamily, right? There's more than one unit in it, but not necessarily how it's used when we start talking about real estate investing and
Yeah,
really being full-time investors. Those are very two different spaces
correct,
to be in.
correct.
So you decided to go from the single family, one dwelling, one roof, one set of tenants, and said, hey, screw this whole 2, 3, 4 unit thing. I want to go a couple hundred at a time here.
Yeah.
Many people are going to say, well, that's a big leap, Veena. How did you do that?
People think it's so crazy when I say this, but I've never owned a duplex. I've never owned a duplex, a triplex. The smallest multifamily I've actually owned was 28 units. And
Okay.
I wouldn't do that again because it is so much harder to manage small multifamily than it is to manage large multifamily assets. In fact, right now, the smallest I have in my portfolio is 192 units. So I have 192 units, and that is harder to manage because it's so sensitive to any movement, whether it's like cap rate, it's sensitive to vacancy. It's just more sensitive than my 400 plus doors because there you have, 10 units that go down. It's not that big of a deal. It doesn't really affect your occupancy nearly as much as
Right.
10 units going down on 192 units. So when I tell people that I buy large multifamily, I mean like institutional size multifamily, and it's because
Right.
I find it easier to manage. Now, the way I made that leap was the first time I did a deal, my first multifamily was actually 200 units. I was naive enough to not realize that this is not normal at that time because I didn't have friends that were doing that, right? Like my
Right.
friends, they're doing large or single family, or they were buying like duplexes and quads. But I didn't realize that most people go single family to like quad to 10 or 20 units to 100 to maybe, 200, 300, 400. And a lot of people don't ever get there. What I didn't realize though was that I could have just gone straight to 400 doors and never stopped anywhere else. And I didn't know that. Uh,
Right.
Partner.
I'm so happy you said that because I feel like so many people feel that they have to slowly kind of increase the amount of
Yeah.
units, and then it's this wild, huge leap to increase incrementally in that sense. So I
Yeah.
love the fact that you just kind of said, well, there were just things I didn't know. I didn't know that I was apparently supposed to have all these blocks.
Yeah, I had no idea. Well, and now looking back, what I do know is the one thing that helped me leapfrog the steps that I did leapfrog was having good partners. So partnership, community, being around people who know and understand where you are, where you're trying to go, and have done the thing that you're trying to do. That's like the most important thing because I see now there's like so much in the info education space out there, especially multifamily.
Mhm.
I'm like, I'm looking at some of these people and they're my friends. They're people I really like and care about, but I'm looking at them and I'm like, you're teaching people what? Like, no, stop doing that. Because the big multifamily game, a big piece of it is securities rules and raising.
Mhm.
And that's something that I really enjoy doing is raising capital. And I have raised over $375 million across my entire portfolio over a decade plus, right?
Mhm.
A lot of people are teaching it incorrectly, and that's just so scary. It's just a scary landscape because the good thing about social media is everyone has a platform. The bad thing about social media is everyone has a platform, and it's the double-edged sword, right? Where, yeah, you can get a lot of really great information, but then it becomes who do you trust? Who do you listen to? And it's a marketing game, right? Like, a lot of people do really great at marketing, but they don't have the technical experience to be teaching this to someone, in my opinion, because it's unlawful the way they're teaching it.
Right. And I want to get to that with capital raising because I know that that is something that you've done so successfully. But before we get into capital raising, when we think about that small multifamily, that because you did purchase the single families to kind of
Yes,
start with and then said, nah, there's no way I'm going to continue to scale here.
correct.
What, talk to me for a minute about what obstacles you found in that scaling with single family that made you say, I got to find a better way.
Well, I was collecting all of the rent, and I'm so terrible at collecting rent because I have like a bleeding heart. So they'd be like, Miss Vina, I'm sorry I don't have rent because I had to like buy diapers and I had to get groceries and my mom's tire is flat. And I'm like, oh, okay, it's okay. Just next time, like, I was just so
Right.
bad about enforcing the rent, and it didn't make me feel good, and I needed a layer in between myself and my assets, but the problem is I only had, like, a handful of houses, I didn't have 100 homes, so
Right.
I had to be the one doing it, and I just was not cut out for that, and I was like, "Okay, there's gotta be a better way." What point is a point where I can justify the cost of someone managing this? And that's around for me at that time, it was around 100 doors, single family doors. And I was like, "I don't see how I'm ever gonna get there because even in my busiest week, I bought 5 houses."
Right.
And I'm like, "I can't find 5 houses to buy every week, and even then, how could I ever own 10,000 units? It would take me forever and ever and ever." So that's when I was like, "Okay, I need to find something that scales quicker, but still lets me do the thing I love," which is I love investing in communities and revitalizing communities and creating a home for somebody, like, that feels good to me, feels better to me than just having, like, an office space or a retail space or something like that, which are important too, and I invest in those, but I don't operate those. I'm the silent investor on those. But that's how I started looking at like true multifamily was at that realization that I couldn't scale the way I wanted to.
Right. And really then that cost of covering that property manager or somebody else to really do the day-to-day operations of it,
Uh,
it sounds like.
exactly.
Okay. When you then moved to not just multifamily, but large multifamily, how did that solve your problem?
So now I say like 70 doors, 70 to 100 doors now in today's market, but at around 70, 75 doors, you can justify the cost of a full-time leasing staff and a full-time porter on site. And
Mhm.
so now what happens is I don't have to take a call about the leaking toilet anymore because I have a porter that can do that. I don't have to take the call about why your rent is late. I have a leasing manager who does that. I have someone who manages literally the day-to-day of the asset, which is a thing I don't love doing. I don't love to property manage. I like to asset manage more than property manage, and even that I don't love, but I'll do
Mm.
it, right? That's more a means to an end than anything else. But that's how I look at 70 or 100 doors and up. And so when you have 400 units at a time, now I have a full staff on site. And there are different problems that come with larger assets, but it's just from a property management perspective, it's much more efficient.
Gotcha. And I see what you're saying that with that type of volume all at one space, it not only made sense from a financial perspective, but also really a time perspective to say, hey, we legitimately need a full-time staff to be here, which kind of built in that team for you to take
Correct.
all those things off your plate. You mentioned obstacles. What obstacles did you then find with the multifamily?
Oh, well, when you're buying larger multifamily, most people are going to raise capital, right? And from the first time I ever took an investor dollar, I've never slept the same ever again. It's a different level of worry, it's a different level of care, it's a different level of concern. And so there's a lot more responsibility and stress that comes with it, in my opinion, but it can also be much more rewarding because you can see bigger exits. You can get like really great returns for your investors. You're less sensitive to the market. You're less sensitive to occupancy, vacancy, things like that. You just have more maneuverability to recover from something that doesn't go exactly the way you had thought or planned. But there's other challenges too, right? Like you have to make sure you have someone who can KP your deals or who can guarantee your deals if that's not you, right? In the beginning, actually, it was us in the beginning too, but we were doing smaller deals. If I had tried to do $100 million deal when I first started, I wouldn't have been able to KP it myself. I would have had to bring someone else in. But at that time, we were doing deals that were like 16 million, 15 million. So we could KP it just in our partnership. But that's a challenge a lot of people will face. Even at 16 million, a lot of people would face that challenge today. But you can solve for that. All of this is solvable.
Right. And that's what I think is so great about real estate investing in general. I feel like it's almost always just a game of problem solving. I feel like
100.
that's one of the best characteristics that a real estate investor needs
Yep,
is to be a good problem solver. And it
yep,
doesn't matter if you're doing single families, if you're
yeah,
doing residential, once again, the 2 to 4 family space, or if you're in large multifamilies, it's still what is the problem presented? It's a different set of problems and then therefore a different set of solutions.
yes, 100%. Bigger problems, really.
Right. So capital raising is something that people can do in different places within real estate investing. Clearly going towards hearing anybody talk about buying hundreds of units at a time. One of the first questions that people are going to say is like, well, how do you even pay for that? Right?
Yeah,
How do you afford that?
yeah,
So that's where capital raising comes into play.
yes.
When you knew that going into it, was that something that like excited you to say, okay, let me go find some other fun? Were you like, oh my God, I have to talk to
Yeah.
people and like have those conversations? What was your emotion thinking about capital raising?
So I like kind of accidentally learned that you could raise capital. I didn't know you could raise capital when I first started. So the way it
Hmm.
happened was kind of organically, where I was doing my single families and then we'd be out to dinner with another couple or friends or whatever. And they'd be like, oh, Vina, what are you up to? And people who are not in real estate find real estate, like, really sexy and glamorous and, like, "Oh," you know, and I'm like, "Okay," you know, and I'm, like, telling them what I do, and then I'd have some of our friends I would be like, "Wait, so if you write a $50,000 check, I'll write a $50,000 check, and we'll be partners on it, and you go do the thing and make me a whole bunch of money and give me the money back," and I was like, "I don't think that's legal." And so I called an attorney that I had been working with in my corporate days, actually. And I
Hmm.
called and I said, hey, so someone wants to write me a check, but you're going to tell me no, right? Because it's illegal to do this. He's like, actually, let me tell you about Reg D, 506B, and 506. He was like, so this is a thing. And that was the moment where it kind of clicked for me what OPM, other people's money, meant. Because I always thought other people's money, this is how dumb I was back then. I always thought other people's money meant the bank's money. I didn't realize it meant like actually other people's money in the form of equity.
Hmm.
So when you figure out the power of leverage, right? Leveraging everything that's other people's time, money, skill set, knowledge, database, all those things. When you figure out how to leverage other people and what they have to bring to the table, your business just 1 million X's because it's so powerful.
Hmm.
And so that was how I actually started raising capital was I kind of accidentally fell into it. Now, going out and talking to people, when I first started, I thought I was begging people for money. If I'm being totally transparent, it's like, please invest with me because I really need this, right? And it's not cute. It's not a good look. Investors aren't like, "Oh, no one else wants to invest? Yeah, let me put my money there," right? So, it can be very isolating and lonely, but what I realize now or what I do now, I'm not begging anyone to invest with me. I'm not selling them on anything. I'm presenting them with an opportunity, and either they wanna participate because they see the value in it or they don't, and either way is fine by me, but I think when you shift your mindset from like, "Oh, I don't wanna sell somebody something," to, "I'm not
Right.
selling you, I'm giving you an opportunity and you can join or not join," it kinda changes the way you approach it.
That was actually when I had a job in sales years ago.
Yeah,
That was like day one of like sales training. And I remember one of the other people in the class was just kind of like, I know I'm here and I really need a job and I really need to be able to make money, but like I really just I don't want to be salesy. I don't want to come off
yeah,
as
everyone
salesy.
says that. I don't wanna be salesy.
And that was exactly the response that the trainer really kind of gave back was like, listen, like you were just sharing what you have and somebody else is deciding if they're going to take it or not, if that's something that they want or not, right? You're
Yep,
showing them the opportunity, you're presenting to them what their options are,
yep,
right? But it's for them or it's not for them, and that's a
yeah,
decision that that other person gets to make. And I think
yep,
that's very important here in capital raising.
yep.
When you first started and realized that you were going to raise capital, because that is such a powerful way to be able to buy real estate, did you go to people that you already knew, or did
Mhm.
you start by finding people that were not in your circle and approaching them?
No, because I did a 506B, which means I had to have a pre-existing substantive relationship with every investor in my deal. And so I started with only people in my network. Now, I'm somebody by nature, ever since I was little, I have like a really wide network, and I'm someone that's decent at keeping up with a lot of different relationships. So I would say my network is just bigger than most people's in general because that's how I operate. It's like I
Mhm.
thrive on that kind of relationship building and networking. So for me, I just had a large enough network that it made sense. Now, I do think most people, when they're starting off, probably should start with the people they know because they're the most likely to actually invest in you
Right.
versus like a stranger because they need to be sophisticated, accredited investors, right? And so if they're accredited, they likely have some level of understanding around investment or investment knowledge. And most of them aren't going to write a total stranger a check with no track record, right? That's a
Right.
lot of risk for them to take on. So initially, I think most people end up starting on a 506B because they're going to have mostly friends and family investing into their first few deals.
Right. So that's where you're really saying that you were able to go to the circle that you had, see who was willing to be able to invest with you, and then do exactly what you asked your lawyer. Hey,
Yeah.
this person that I know wants to give me a check for this amount of money. Can I take that? Yes or no? And the answer you got was yes, right? When
Yeah.
you have that relationship with that person.
Yeah.
Now, 2 points that come up with a lot of our ladies.
Yeah.
First, you're going to have people that are going to say, one, but I don't wanna go and talk to and ask, like, my uncle for money or my friend for money. How do you overcome that?
You don't have to ask your friend or your uncle for money. But this is what my experience has shown me is the closer they are to you, the less they're gonna believe in you when you first start. So usually if it's like your best friend, right? They're gonna be like, "Oh my
Mhm.
gosh, it's amazing. I'm gonna cheerlead you." No, I won't invest on the first one. Come back to me on the second or the third or the fourth.
Right.
So what I always tell people when they're starting out is create such a large network that you don't have to go to your uncle or your best friend. Now, the flip side of that is when you start exiting and you make a whole bunch of money for other people and you go and you tell them like, "Hey, I just did this awesome thing and my investors made $30 million." They're gonna go, "Wait, but why didn't you ask me?" And you're like, "Oh, I didn't know." Like, what do you say to that? Why would you tell them that you didn't ask them or at least tell them what you were doing? It's hard.
Right.
Like my JV partner, before we were partnering, she started doing deals on her own too, and she exited the deal she did right before we started working together at like a 38% IRR to her investors. And I was like, "Ellie, why didn't you ask me to invest in that deal?" She goes, "Oh, because you do the same thing. I didn't think you would invest." I was like, "But you should have at least asked me. Like, I like to make money too.
Right.
I've been mad if you made me a whole bunch of money." And she was like, "Oh, I just didn't think of it." And I'm like, "Okay, well, next time ask me or tell me what you're doing and let me say no."
Right. So still starting within people that you do know, but it doesn't have to be, once again, the closest person to you.
Correct.
And I agree. And that's honestly, that goes across so many different businesses too. I feel like anytime you start like a business, it's usually not the people in your direct inner
Yeah,
circle that are going to support you. It's usually kind of more of like third or fourth degree kind
right,
of people that are going to start to be like, well, great. Like I know you, I know what you're doing.
right.
Okay, cool. But not somebody that we're going to get into a fight when I see you at Thanksgiving.
Percent. 100%. Yeah, and I always tell people too, you should be raising your capital, meaning you should be building those relationships and those networks before you have a deal. Once you have a deal, it is way too late for you to try to be building the relationship and then getting them to establish trust and credibility and then make an investment decision. The timeline's too short in real estate. So I always tell people start raising your capital before you actually need it, not after.
I'm going to come back to a question on that. But
Yeah.
second question that I was actually happy with, so like I said, two stops that I always hear with people with capital raising is one that they don't want to go and talk to, the family and friends.
Yep.
We already addressed that. The second one that you hear, a similar vein, is, but I don't know people with money. What
Oh,
would you say
everybody
to
knows
those people?
with
Thank
money.
you. Thank you,
Everybody
Veena.
knows people with money. You know, this is like the funniest thing when you think about like the psychology of money and people's investment behaviors and just financial behaviors, right? You will see people who have like $20 to their name, but they have the newest iPhone, always the newest iPhone, right? They have brand new shoes and all the latest gadgets and all the things that come out. Like I used to have an au pair that lived with me, okay? Au
Hmm.
pairs make $200 a week. That's their, like, stipend while they're here, and then when you cover, like, room, board, food, everything, right? And we actually paid for even more because we just we could, so we did, but she would always come back with the highest level of phone, and, she would have a newer phone than I would, and I'm like, "You just spent $1,500 on this phone. That means you're gonna work for 2 months
Right.
to afford this phone when your phone was working just fine." So, it goes back to just because someone has, like, a bunch of designer labels, just because they have the flashy car and the house and the phone and the bag and the things, it doesn't mean that they actually have money. A lot of times I feel like they don't have money or they don't have as much money because they're using it as a way to kind of prove their wealth. And we're all guilty of this. Like I did the exact same thing. I remember when I first started making like real money, I was like, oh my gosh, now I can buy a Chanel bag. And I used to buy a bag every time we closed a deal to celebrate.
Mhm.
Now I'm like, I could do that anytime I want. I don't have to, like, wait for this occasion. I just buy the things I really like, and I just wear what I want, like, a lot of like, sometimes my stuff is, like, Amazon.com, $20, so never judge a book by its cover. You don't know what someone has going on in their personal lives, and most people don't talk about their money, especially if they're not entrepreneurial or not in real estate. They're not gonna talk about money or how to make money. It's considered, like, taboo still. So
Right.
you know people with money, you just don't know who those people are maybe, or you don't know how much money they have, but people will surprise you.
I also think when we talk about, like, well, people with money, right?
Yeah.
That there's no quantity to that. So whenever somebody tells
Yeah.
me like, "Oh, I don't know people with money," and I'm like, "But what are you looking for? Are you looking for somebody with 50 grand or are you looking for somebody with 500 grand?"
Yeah,
Those are very, very different scenarios. So to say you don't know anybody with money, well, it depends really what you're targeting, what you're looking to raise, what is the minimum you're willing to accept. All of those different pieces come into play. And what I've
Mhm.
also noticed from my own capital raising, when I talk to people, I get almost the same thing back, where I have people say like, "Oh, well, I don't have a lot of money." Cool.
Y
So, like, how much money do you have to invest? The
yeah.
person that says I don't have a lot is like, "Well, I
Always
only
has the
have like $250,000 in
yeah,
the bank."
yeah,
Meanwhile, another person is like, "Oh, I am so in. I got like 12 grand coming to me
yeah,
like once I get my tax refund, but I have a ton ready to go. What do I do with it?" So it's
yes,
always very interesting to see. I feel like with
right.
money and credit scores, anybody that says that there's as high is usually low, and anybody that's low is
Oh,
usually high.
I agree with you on that, and I think about it just, like, in the context of my own life, I'm always like, "I don't have any money, like, can you buy me lunch?" That's what I always tell people around because I don't, I feel like as real estate investors, I never have liquidity. My money is always spent, it's always out, it's either loaned out, invested out, I have ARs that I'm paying, like, whatever, like, it's the money comes in and it goes right back out the door, so I feel like it's this weird dichotomy with real estate investors, entrepreneurs in general.
Right. But that's why it's so important to really get to talk to a person and understand what they're looking for, what they can even do with that, and
100%.
what once again, what monies they do have, don't have, and what they want to invest. I'm not even gonna say willing, but what
Yeah,
they are really looking to
yeah,
invest with. Because all because somebody has 250K in the bank does not mean that they're willing to invest all of
yeah,
it.
100%.
So you mentioned then that it's important to make sure that you start doing the capital raising before you have the deal, right? Okay. One of our most popular questions we have about that
Yeah.
is great. Somebody gave me a check. I don't have a deal. Or somebody won't give me a check because I can't show them a deal.
Yeah,
How do you
okay.
get around that, Vina?
So when I say raise capital before you have the deal, I mean get verbal commitments. Do not take someone's check until you have proper documents and paperwork, right? And if you have a fund, this problem goes away a little bit where you can start raising money into your fund before you have a deal. This is why I don't really love blind or semi-blind funds is because when you first start out, it's exactly the latter of what you said. "Oh, well, what deal am I investing into? I need to see
Right.
it." And in my experience, most investors need to see and understand the metrics of a deal before they'll actually invest in a deal. So you go to them, right? And this is what I would do. I would go to an investor and say, "Hey, Becky, I'm Veena Jetti. I run Vive Funds. We target Class B value add multifamily in Texas, Florida, Georgia, North Carolina, South Carolina, and Arizona. And we target a 12 to 14%, 12 to 15% IRR over a 5-year hold. And that's a roughly a 14 to 16% average annualized return. Is that something you'd be invested in or you'd be interested in investing in?" And you'll say, no, I don't like real estate. I don't like you. I don't like multifamily, whatever it is. Right. Or you'll say, oh, yeah, I am interested in that. Amazing. If I bring you a deal, what kinds of questions do you have about me or the company or the strategy? Right. So you're going to ask
Right.
me, like, what's your track record? Who are the general partners? What's your background? Why are you qualified to do this? How does it work? What do I have to do? You'll ask me whatever your basic questions are. I'm gonna answer all those. Then I'm gonna say, "Okay, Becky, I love that you're so excited and you're interested. I don't have a deal to give you right now, to show you right now. I only say yes to the best deals, and I don't have a deal right now.
Right.
Well, I'll put you on my list, and when I do, I'll reach back out to you, and then you can look at the deal and ask me any follow-up questions there. So now when I'm sending you my deal, you already know Veena, you already know Vive Funds, you already know what we're trying to do, what our general strategy is, and now you're just saying like, "Okay, I do like this many units, I do like this market, I do like the purchase price, I like the story, the business plan, I believe in it. Yes, I'm investing," or, "No, I love Veena, love Vive Funds, love all these things, but I don't love Phoenix as a market. I don't think it's a good market, or I don't have the money right now, or whatever that is." Then you're telling
Right.
me no, but you're giving me a good reason why, so that I can start getting to know you as an investor better and develop our relationship better.
What also is important about there is that that means that you always want to be in capital raising mode,
Yes.
right? Because once again,
Oh,
now all of a sudden, let's say I'm going to use simple numbers here. You're looking to raise $1 million.
yep,
You have two people that are going to give you $500,000 each. You were like, yes, this is perfect. I found this property.
yep,
But then, like you said, you went and that person's like, actually, I don't really want to. I don't want to be a part of a deal in Phoenix.
yeah,
Well, great. Well, now you have, half of what you really thought you were. Now all of a sudden you can't go back to the other person and be like, hey, that deal I told you, now that's going to fall through just because you didn't have the rest of the money lined
yes,
up, right? So, for
yeah,
example, by having a third person that was also going to commit $500,000, well, now you know if something happens, maybe somebody said life's changed since last time we spoke.
yeah,
Not I invested, I found something different in the meantime.
right,
You have that backup that you can still move forward with the deal
yeah.
that you want to have in hand.
Yeah, I tell people right now in today's market, if they need $1 million to get soft commitments of between 2 and 3 million, and then they'll fund 1 million, because a lot of investors will back out at the last minute.
Right. I feel like it once again, it kind of reminds me of tenants here. It's kind of like once you're like, okay, great, like now I need the funds.
Yeah,
Now it's time to pay the security deposit and first month's rent. That's all of a sudden when you kind of get like crickets from some
yeah.
people, or once again, then people are just not as like invested or willing to kind of move forward.
Yeah,
So,
and things happen, so you have to be
right,
ready for that. I mean, like, I have a deal that I'm supposed to be investing into, and I'm ready to invest. I'm just waiting for another deal that I loaned money on to come back so I can redeploy, and it hasn't. That deal got delayed, so it's like a domino effect, and
right.
this happens often.
All the time, especially once again, when you're talking about real estate investors, we tend to have our hands in a bunch of different pots, bunch of different investments. And you're right. Sometimes, like I am the bank, sometimes I'm using a bank, right? So there's just things in those transactions that sometimes take a little bit longer, especially in our market, that
Yeah,
we just sometimes cannot control. So now you found your investors, right? Let's
yeah.
say you got that $3 million commitment, you're looking for that property for that $1 million, you found your deal, you're ready to go. Great. How does that all work now with attorneys? And what are my fees going to look like from that side
Oh,
of
yeah.
now saying, well, where are they just writing this check now to me? And now all of a sudden,
Uh,
like, I've got $1 million in my bank account thanks to these checks coming
I mean, don't do that.
in.
Okay, so your first call when you're even considering if you should raise capital or not should be to a securities attorney. Notice I did not say real estate attorney. I did not say contract attorney. I didn't say a divorce attorney, family law, general counsel. No, a securities attorney, preferably one that is used to working with people like you and I who understand the regulations around real estate. And so we use Nick McGrew. He's out of LA. His company is called Polymath Legal. He does a lot of education too. So if you guys are considering getting into capital raising, go to his Instagram. It's NIC the lawyer, NIC the lawyer on Insta. And he does like a lot of content around what the basics people need to know are. And so you reach out to Nick, you'd say, Nick, I have $1 million property. It's in Phoenix. It's, whatever, 10 units. This is what the business plan is. I need to raise the full million or whatever it is, right? He will then have like a whole document of questions where you'll submit all of your answers. Now that depending on he has like different levels of package, but his start somewhere around like 10 grand for just the attorney work, plus
Mhm.
whatever filing fees you have, because we have to file what's called blue sky filings. That's your safe harbor exemption. And that costs, I think he advises to estimate about $600 per state that you're raising capital in. So if you're raising from 10 different states, assume about 6,000. I think the total amount that you would pay if you raise capital in all states is somewhere around like the 20 to $22,000 mark. Very rare for a deal that size that you would be raising capital in all 50 states.
Right.
So more likely you're looking at, let's call it 15 grand conservatively on the low end, maybe 20 to 25 all in. This is like all your documentation. This is two LLCs being formed. This is the operating agreements for those. This is your Form ID and your Form D for the SEC. This is your blue sky filings, everything all included. Now, most people then go, but wait, I don't have $15,000. So they're like, I'm going to skip this. Don't skip it.
No.
It's not a good idea. Instead, what you should do is when you're underwriting the deal and you're raising that $1,000,000, you have to put in there that part of your closing costs is the lawyer's fees of 15,000. And so now you can put it out of pocket up front or front the money, but then as you raise the fund, you can get reimbursed for the expenses of the fund.
Right. And that's going to work for a lot of other costs that people have and things is you need to think about what is the cost of acquiring this property,
Yep.
not just the actual, once again, now you're talking about that team, the people that you're gonna be managing it, all of those different things, costs, holding costs, if there's anything else that kind of goes into that purchase as well, we need to consider all of those costs. And yes, attorney's fees is
Correct.
one of those.
100%.
So that's gonna
Yeah.
be incredibly important to make sure that people are actually putting all of their fees into one place to be able to say, hey, based on this deal, and we should be doing that when we do our deal analysis anyways. And that doesn't matter if we're buying a single family home or 200 units here.
Correct.
We need to make sure that we understand all of our costs, and an attorney cost should be one of them in
Yes.
those situations. So we
Yes.
need to look at all of our costs together because that's really the only way we can evaluate if something is still gonna be a good deal. We need to understand what those costs are gonna be looking at that. So I
Absolutely.
love that idea of being able to say, hey, those lawyer fees that I need to file this large group of people that are
Yeah.
gonna be investing in, we need to be able to make sure to account for that cost moving forward.
Yep.
So I love that. For what would be your best piece of advice for a newbie getting started in capital raising?
Okay, so like I said, first, don't do it the unlawful way. Make sure you reach out to a securities attorney. And all attorneys are not created equal. All securities attorneys
Mhm.
are created equal. So just know that use someone that you get a good referral from, a trusted source, but that should be your absolute first call. The second thing I would say is it is so much harder than you think it's going to be, but the first one is always the hardest. It doesn't get easier, you get better. Right? It's not gonna get easier the second time, but you're gonna be better the second time. You're gonna be able to anticipate the questions investors wanna ask you. You're gonna be able to move to more of like a one-to-many format. When the first few times you do it, you might have to pick up the phone and spend an hour with each investor. I mean, we all paid the piper that way. But you will get better, you will get to more scale, and then always, 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 always do what you say you're gonna do and follow through. And whenever you think you've communicated enough with investors, double it, and then maybe you're communicating enough. And we've always lived by deliver good news fast and bad news faster. I see a lot of people who have
Hmm.
raised capital and then, deal starts going sideways. And especially in this market, it's a tough market. This is an investment. There is risk. And if you have a good attorney, they would have disclosed those risks to your investors. Most investors will put up with a what you ask them for if they can understand the why you're asking them for that. So, what I'm asking is that we accrue your returns. Why is because of ABC. If
Right.
you ignore them, and I see this happening a lot right now, where investors don't wanna pick up the phone and call their LPs or their passive investors. And so what happens is the passive investor starts panicking, and then they start going out and they start asking other people like, "Hey, have you heard of this person? Do you know about this?" And then it becomes this big thing, and you're no longer controlling the narrative, and you're no longer giving your investors good information. So I always tell people, when things are going wrong, that's when you should be overly communicating. Even if you're just sending an email to your investors to say, hey, me again. I have no updates since 3 days ago when we talked. And the worse your deal is going, the more you want to be communicating. So when we've had deals that don't go the way they're supposed to go, even though it's temporary or we know it can be fixed or whatever, we immediately double our communication at a minimum. Usually we're quadrupling it. So you want to take that same approach because investors, if you're communicating with them, that's what they care about the most. And it can be scary and it can be hard to deliver bad news, but you have to do it. This is part of what your investors are trusting you for.
Right, and that's also kind of part of the dream of getting that investor to then invest with you again and again and
Ex-
again.
Exactly. That's where trust is built, is when things are not going well.
Right. Veena, thank you very much. This was very, very helpful to start talking about how to raise capital, how to use other people's money. I really appreciate your time. Thank you very much for being here today.
Thank you. Thank you for having me.
Yeah, of course. For all of our Lady Landlord listeners out there, do make sure to hit that subscribe button so you do not miss the next episode of the Lady Landlords podcast. And make sure to leave us a 5-star review. That always helps other women that are looking to get information on how to get into the game in real estate investing to find our podcast. Thank you so much, and see you next Tuesday on the Lady Landlords podcast.
Thank you for listening to the Lady Landlords podcast. If you're feeling stuck in your real estate investing journey, visit lady-landlords.com to book a 15-minute orientation call with me and see if you're ready to join our mentorship program. Or you can subscribe to our newsletter and join our Facebook group for exclusive real estate investing tips and offers. Invest with confidence. Become a Lady Landlord today.